right, take it away, John.
Okay, well, we're normally used to seeing Bud here as the intro, but Bud is a little under the weather, so I'm going to take it this time. We're here today to talk about the American Rescue Plan, and we have 4 panelists that are experts in their area, and I have their bios, which I'm going to beat up a little bit as we go through this. So I'm going to start off with Caitlin Jannucci. She works for Nisivoccia. Caitlin has worked with Nisivoccia for 11 years. She specializes in providing accounting, audit, single audit services to municipalities, municipal utility authorities, social services, and school districts. Caitlin holds the following degrees, licenses, and credentials. She has a BS in business administration from Seton Hall. She's a CPA licensed in New Jersey, a public school accountant in New Jersey. She is also an RMA. That I didn't know. That's great. Caitlin's professional memberships and affiliations are the American Institute of Certified Public Accountants and the New Jersey Society of Certified Public Accountants. So that's Caitlin. And Caitlin is also the ex officio treasurer of the Morris County Library Foundation, where she does an awesome job. I know she's trying not to take that over. So Caitlin is one of our panelists. The next one is Melissa Howard, who happens to work with me here in the county. We've been working together now 6 months. So Melissa offers more than 16 years of local government finance experience from a variety of positions, first spending 4 years working for the city of Jersey City as a senior and principal account clerk. Melissa obtained a solid understanding of the financial, operational, and regulatory side of municipal finance. She then switched over and started working for the County of Hudson as both a fiscal analyst and then the division chief of accounts and controls for 8 years. Then she moved on to Bergen County as the assistant treasurer and has more recently been promoted to the position of treasurer for the county. And she's been here 3 years, but it's given her the ability to experience local government operations in a multitude of roles from, a large city. So she's not worked in small, although she did do a little bit of small work in a small town doing some consulting in the middle. Melissa earned her bachelor of science degree in business administration and accounting from Felician College. She also obtained her master's in public administration from Fairleigh Dickinson University. And Melissa is certified as both a municipal and county finance officer. And as you're about to learn, Melissa is the subject matter expert for the County of Bergen when it comes to CARES, ARP, ERAP, which she's got some great stories about ERAP. And she's been one of the primary people here at the county that has embraced the program, dug into the rules and regulations, and has really been an integral part of this entire process. And I know she really enjoys doing this every day. And she's going to grimace now because sometimes it drives her crazy. Our next panelist is Julie Kupilik. Julie is currently the CFO of Pequannock Township. She has previously worked in other municipalities and counties. The counties is plural there, Julie. It's one county, I believe. Uh-oh, you're muted.
It fit the sentence.
Serving in many different roles within the finance department, becoming CFO and became a CFO in 2018. Throughout her career, she has taken a special interest in the grant fund and the challenge of turning legislation into action while finally putting that college skill of reading footnotes to use, which is very funny. So Julie was in Morris County when I served as an interim role for a very short period of time. And then she quit as soon as I got there. So I took it personally. But Julie, that's Julie's bio. And then the last one is Angelica Sabatini, who really goes by Angel. She is the assistant CFO at Randolph, only for a little bit longer because she's got some news to announce. Right? You want to do it or do you want me to do it?
You can do it.
All right. So Angel has accepted an offer with the Borough of Stanhope as the CFO and tax collector. Congratulations, Angel. Nicely done. So Angel graduated from the College of New Jersey with a BA in mathematics. Post-graduation, she served as a utility collector in Florham Park for 2 years. She then began working as the assistant finance director of Randolph Township and has been there for the last 5 years, not much longer. She has earned her CMFO, CCFO, CTC, and QPA licenses. And didn't you get a mini master's?
Yes.
And she also has her mini master's. Angel was just recently appointed as the next CFO and tax collector and QPA for the Borough of Stanhope and will be starting there at the end of this month. So again, congratulations. And I think that's everybody. So with that, I'm going to stop speaking and you guys can talk.
Okay, let's try to screen share. It all looks good, right, guys? Yes. Okay. All right, so thank you, John, and good morning, everyone. Thank you so much for joining us today. As John mentioned, my name is Caitlin, and I am joined with 3 other very knowledgeable women, and we are here to instill some wisdom on the ARP grant fund and final ruling today. So I know it's a very heavy topic, so I figured we could go through quickly just an outline of how our presentation is going to progress today. So for part 1, we decided to take a step back and do more of a broad overview. So Julie's going to start us off today, and she's going to talk about the interim rule and how all the changes that need to progress to get it to the final ruling. And then part 2, we're really going to get into the nitty gritty. So part 2 is our meat and potatoes, and Angel is going to take us through all the technical changes. There are 4 main updates that we want to discuss today that happened with this final ruling. And of the 4 main changes, we decided to take a deeper dive into the emergency rental assistance program, which, as John mentioned, Melissa is very knowledgeable in that area. So she's going to spend some extended time on that topic today. And then for part 3, both Melissa and I are going to talk about reporting and compliance. So for myself, I'm going to talk more about a auditing perspective. So we will discuss what the ARP grant fund is going to look like in your annual financial statements, and if that grant funding expenditure will cause you to have a single audit and how that might differ from previous audits that you're used to. And then Melissa is going to talk about all the technical aspects of doing your annual and your quarterly reporting. And she's also going to talk about ID.me, which I know has been a hot topic. So stay tuned for that. And then Julie's going to round us out with part 4. She's going to come full circle, and we're going to talk about the importance of professional community and public comment and how that really helped to shape the final ruling that we're going to discuss today. So as I mentioned, I know this is a pretty lengthy webinar today, so we will be taking a small break about halfway through, and I'm sure most of you are here today to get your credits. So there's going to be 12 polling questions interspersed throughout the presentation. So when they pop on, just pause and make sure to answer all of them. So I think that's everything. So Julie, I'm gonna pass it on to you, and just let me know when you want me to flip through to your next slide.
Okay, so what struck me most about first getting the ARP kind of passed and handed out is what is an interim final rule versus a regular rule. So I started to kind of look and see what the difference was and why this actually existed from the start. So I kind of asked myself, well, what is an interim rule? And the biggest part of having an interim final rule versus a final rule is that it bypasses the normal notice and comment period. So basically the interim final rule comes out and there's no ability to comment prior to that. There's the comment period between the interim and the final rule. So after looking at that, there's also other types of rules. They don't really apply to ARP, but there's also a temporary final rule, which has an expiration date, and a direct final rule where there's no foreseeable opposition to the rule. But if the agency gets a lot of comments in opposition to the rule, then they'll relook at the rule and kind of work from there. So an example of another interim final rule from all of these COVID grants that came out was the Paycheck Protection Program. And the reason why that one had an interim final rule was Congress gave 30 days for the rule to be implemented. So there was not enough time for the normal notice and comment period. So you can go to the next slide. So the American Rescue Plan was allowed to have an interim final rule under the Administrative Procedures Act because it was related to a grant fund. So in the back of the full text, of the ARP plan for the local government relief fund, they talk about a lot of this type of stuff as to why it was exempt, and they give all of the the legal background as to their reasoning to support why they had the interim final rule. So for this, because it was related to grants and the notice and comment period was impractical or unnecessary or against the public interest. So in this case, because there was, COVID related health responses and there was economic need for these funds to get out, that was also an exemption to the notice and comment period, and also implemented statutory conditions related to the eligible uses, the payment of funds, the reporting. So those rules had to get out as well. And it also complied with Executive Order 13132, federalism. So the agency can't issue a rule that has an impact on federalism, and it can't pose substantial direct or compliance costs onto state and local tribal governments, or it is not required by statute to be implemented, or it preempts state law unless the agency meets consultation and funding requirements. You can go to the next slide. Okay, so when reading this is kind of the structure as to how it looks like. So there's a preamble to the rule, which includes the summary, the effective date, another summary. It has the summary of issues and actions under consideration, and then the supplementary information, which is the basis and purpose for the rule. So, so the summary would have the summary of issues and actions. The effective date would be when obviously the rule is effective. And then the supplementary information, the basis and purpose is the summary of the societal problems and the regulatory goals, the facts and data the agency will rely on. It'll respond to major criticisms in the proposed rule and explains why the agency did not choose other alternatives. We can go to the next slide. So this is kind of just what I went over, just what the basis and purpose goes over. So there's an example from ARP about some of the supplementary information that's in there as well.
I just want to chime in and do our first polling question. So we have one in the book. So I'm going to go ahead and launch a poll. Everyone should see the first question. Is this your first ARP webinar? Just kind of gauge your guys' knowledge, and if for any reason anyone has any problem responding to the polls, you can just send me an email and we'll get it sorted out after. I'll put my email in the chat. And like Caitlin said, these are for credit, so just make sure you all guys all get your responses in. All right, keep it open for a few more minutes, seconds. Okay, I'm gonna go ahead and share. So for most people, looks like they have attended previous webinars, but for some, this is the first, so hopefully you find it informative. All right, continue.
Okay, so some of these, okay, so key terms in the text. In the full text of the rule, there's actually a section in the back that really goes and looks over some of the key terms that are in the rule and gives you a short definition. So it's within the text, they define it, but it can get pretty lengthy. So an example here would be, they use the term general revenue a lot. So in the back, they may define general revenue in one point, but they'll keep using the term general revenue throughout the text. So sometimes it's easier just to go to the back and look at the key terms and the short definition. So it's just a lot easier to understand, and it's a lot less to read through. So it's a great resource actually within the full text to really go there, and it's a nice summary of a lot of the key points and key terms that Treasury put in the ARP text.
Okay, before I move on to part 2, did anyone have any questions or comments on part 1? All right, so I'm going to go through some of the major changes in the final rule. So I'm going to do that by going through the 4 eligible use categories. The first is lost public sector revenue. The second would be the support of COVID-19 public health and economic response. And then we'll go into, Melissa will go into emergency rental assistance, then premium pay, and investments in water, sewer, and broadband infrastructure. Okay, so for replacing lost public sector revenue, with the final rule, there's now 2 options. So you can either take a standard allowance or calculate the revenue loss each year. Under the revenue loss category, you may utilize the funds for any general government services unless specifically excluded by Treasury. And some examples would be of general government services would be construction of schools and hospitals, road building and maintenance and other infrastructure, health services, general government administration, staff and administrative facilities, environmental remediation, provision of police, fire, and other public safety services, including purchase of vehicles and fire trucks. And I think, I don't know, Caitlin, did you want to chime in here or?
Yeah, so before we move on to the next slide, just because this one's up and has our nice examples on there, you know, working with my auditing firm, you know, we've obviously gotten a lot of questions and had a lot of discussions with our clients. So I thought it'd be useful to kind of chime in and just share some stories that we've encountered thus far with this grant. So I have one township who resides in an older building, probably dates back to the 1900s, and the building itself, when it's older, it has some construction issues. So for the past 10+ years, they've been kicking around an idea of installing an elevator and making their building fully ADA compliant. So right now the building is partially compliant. They do have one chairlift, but that itself poses some problems. So within the community, they do have a senior living, and depending on the topic that's at hand for any given township committee meeting, sometimes a large group of the senior community would like to come join, talk during the meeting, and when they arrive, it takes about 10 minutes to get each person from the ground level to the main level to get to the courtroom where the township meetings are. So the township itself, like I said, was kicking around this idea. It's a expensive project. It's been on hold for a while, and they thought now's the time to strike with this ARP grant funding. So prior to COVID, having just the one chairlift really caused time delays. Post-COVID, it posed social distancing issues with people trying to assist them onto the chairlift. They even ran into excessive sanitizing issues, et cetera, et cetera. So, talking with their administration and their township committee, they've decided that now's the time to use this funding for this capital project. It's going to assist the residents. It's going to help the building as a whole. And it fits this criteria. So I just wanted to pop in with that story because this topic itself is the most broad out of all the 4 main changes. And I just wanted to share that as a good example that I've encountered.
I just want to do our next polling question because it has to do with the slide about standard deviation. So I'm going to go ahead and launch this next one. Question is, did your municipality use the standard allowance revenue loss method, or will you be calculating the revenue loss? I'll give everyone a minute to answer.
So while we're doing that, we have a question. Was anyone locked out of the Treasury's portal?
Was it the ID.me portal or the login.gov portal?
So it's from an anonymous attendee. So they're gonna have to repost that question with to clarify that one.
Yeah, I was going to ask the same question, Julie.
Yeah, because I got locked out of the login.gov because I used the Duo security to get in. And what happened was I switched phones. So I had to go through the whole process of deleting the whole login.gov, waiting the 24 hours, and then recreating my login.gov portal with the new Duo on my new phone. So
So for the anonymous attendee, I think that answers the question because it was login.gov that they said. The other one is, we have a question here, or more of a statement. Some have expressed staying away from the revenue loss. Any ideas why? And I think the issue with the revenue loss using that is you've got to figure out a way to get off of it in the year 2025. So
Yeah, I would agree.
Also, John, I'm not sure how many people have done it, but the revenue loss calculation and the rules surrounding it are very complicated with the tax increase and the percentage and what you can and cannot include in revenue loss. So I think the fact that Treasury has said you can use up to 10 million, a lot of people are just going with that standard allowance instead of trying to go through the whole process of doing all the complicated calculations, under the concern that at some point, there's the potential to be audited, and if the calculation's wrong, what kind of issues you can run into with that. So I also know that's an issue.
right, and then I'm not sure if everybody's aware, but they changed the factor from, was it 4.1, Melissa, to 5.2, which is a nice jump for anybody that is using it. But again, you need to figure out a way to wean yourself off. That's a conversation that Melissa and I have often. Is we're using. It was $30 million in 2021. It now bumps up to 39 million in 2022. And even though we have a large budget, that's still a big nut to crack. All right, there are no more open questions and no chats.
So if you choose to use the standard allowance, you get 10 million in aggregate, not exceeding the award amount. So in the case of Randolph, we'll be receiving roughly 2.5 million between both tranches. So we can, if we use this standard allowance, we can use all of the money under the revenue loss category. If you choose to do the calculation, this is the basic calculation. First, you have to determine what your base year revenue is. You calculate the revenues collected in the most recent full fiscal year prior to the public health emergency. And then you calculate your counterfactual revenue, which is calculated with the formula you see there on the screen, and is the number of months elapsed since the end of the base year. And the growth adjustment, as John just mentioned, was increased. So now it's the greater of the growth rate, or 5.2%, or the recipient's average annual revenue growth in the last 3 years prior to COVID-19. So you identify your actual revenue collected over the 12 months immediately preceding the calculation date. And the revenue loss would be your counterfactual revenue minus the actual revenue. And if your actual revenue exceeds counterfactual revenue, then your loss is 0 for that year. And something to add here that was changed with the final rule is you're now able to include municipal utility revenue in the calculation, which is large because a lot of people are hurting with the lack of interest on water and sewer right now. And if you're looking for a good calculation, there's a spreadsheet linked to the local finance notice that just came out last week. That's pretty basic to help with this calculation. Okay. And then one additional thing to add that came out in the final rule is that the funds available under the revenue loss category can now be used to meet non-federal cost share or matching requirements for other federal programs and grants. Except for the non-federal share for Medicaid or CHIP programs. So before we move on from lost public sector revenue, is there anything that anyone wanted to ask or add to that?
Give me just a second while I unmute. What if you've already submitted the revenue loss worksheet when submitting the grant application, but now wish to use the standard allowance instead?
I believe I would have to double check, but I think I read that you can change it now if you had submitted it before the end of the year and before the final rule came out, but you will need to decide if you're using the standard allowance or the revenue loss worksheet prior to your April 30th report.
Question here says, we have had the question of whether revenue loss can be, did you guys read this? Because I stepped away for a minute. Whether revenue loss can be used for the required match for a state grant. The rule says other federal, but doesn't mention state grant matches.
Yeah, I was on the webinar last week or earlier this week for the league, and somebody else asked that, and I think that Treasury is supposed to be getting back to us on that. So I don't know if anybody else had a better idea, but.
This is a question that says, this is the category you would use to purchase police cars and fire trucks?
You can use it to purchase police cars and fire trucks. You can use it for any kind of general government service.
So to the attendees, if you actually do it through the Q&A, it makes it easier for me to make sure I don't miss your questions, but I'll still monitor both. I think that's it for now.
Okay. Okay, so the next category is premium pay. You may provide premium pay for essential workers performing essential work during the pandemic. Premium pay may be paid up to $13 per hour in addition to the worker's regular compensation. And premium pay may not exceed $25,000 for any single worker during the program. Okay. All public employees of local government are eligible workers. Came out with the final rule, except for elected officials or volunteers like your volunteer firemen or ambulance squad, they would not qualify. Eligible non-public employees include workers needed to maintain continuity of operations of essential critical infrastructure sectors. And this is a long list of the sectors that they mentioned in the final rule. I'm not going to go through them all, but just to give you an idea. So in order to provide premium pay, there's a couple steps that you have to follow. First, you have to identify essential workers. Then you have to verify the essential worker is performing essential work. So if the worker is completing their work by telework, it does not qualify. And to verify the work is essential, they have to meet either one of the following. First, either regular in-person interactions with patients, public, or coworkers, or regular physical handling of items that were handled by patients, public, or coworkers. And then once you verify they're performing essential work, then you just have to meet one of the following. Either the worker would have to be earning less than or equal to 150% of their state or county's average annual wage, or they have to be not exempt from the FLSA overtime provisions. If they don't meet either of those two, the recipient may submit a written justification to Treasury detailing how the premium pay is otherwise responsive to workers performing essential work during the public health emergency. All right, so before I go into this, was there anything, comments or anyone wanted to add about premium pay?
We have one question that says, NLSA followed up on this AM, I guess this morning, and says that funds may be used for state grants.
Okay. So I think that's following up from the question before.
Yeah.
So, okay. All right.
Just
So,
sorry, Angel, we have a polling question about
okay.
premium pay I want to do now.
Okay.
I'm going to launch it. This question is, did your municipality opt to provide premium pay for individuals that met the ARP definition of essential workers during the pandemic? Give everyone a minute to respond. All right, just give it another sec, get your answers in. Okay, great.
Okay, so I guess there's a couple people that did. So the next category that we're going to go through is support of the COVID-19 public health and economic response. This is used to meet the public health and economic needs of those impacted by the pandemic in their communities. So in order to use this category, you just have to identify eligible uses or identify a COVID-19 public health or economic impact on an individual or class, and then design a program that responds to that impact. So at this time, Melissa's going to go into emergency rental assistance. But before she starts, is there anything that anyone wanted to question or add?
Well, I can add, like in this category, what we did here in Bergen County is under CARES, we started a food security task force. So what happened is when COVID hit, we found that a lot of our residents were having food insecurity issues. So under the CARES money that we received, we started the food security task force, and now we have broadened the basis of that food security task force under ARP, because we're still seeing a lot of individuals are struggling. So we're helping out all of our food pantries. We're doing, we're supplying them with technologies to help the residents of Bergen County. So it's a really good, if you're having that issue in your towns or your counties, it's a really good way to kind of use the money to help those impacted with food issues. Okay, emergency rental assistance. So I've been working on the emergency rental assistance for Bergen County since the inception of the program. I have to say it's probably the hardest program of all of the programs that we've received federal monies for. In terms of administering the money, in terms of the reporting of the money, the guidance of the money, there's a lot of holes in the federal guidance that make the grantees of the money a little uneasy. And I'm not sure who on this call has received emergency rental assistance money and how you guys are doing getting it out, but it is a very difficult program. So the emergency rental assistance program basically is a tenant landlord based program. And that's very important to understand because the tenant and the landlord should be participating in the program. The tenant especially, because the program goes off of the tenant's income to see if they're eligible or ineligible for the program. And it can be distributed to the qualifying landlords. We only pay the landlords here in Bergen County because we are finding that there's a lot of fraud in the program, and we find the best way to prevent that fraud is to pay the landlords directly. And I'll get into how we do that here. Utility providers, and you have the option to pay the renters if you so choose. This is really a program to help struggling renters, but I also like to tell my landlord the program is also to help them. In the beginning, when this program came out, we had a lot of disgruntled landlords because they felt like the program was only geared towards the tenants and helping the tenants, and they were the ones suffering from not getting the rent paid. So we try to ease the minds of the landlords by saying the program is actually benefiting you because the money will go directly to you. So if you and your tenant act in harmony and get everything into the program, then the landlord will be satisfied and not have to go to court. The tenant will be satisfied and not have to go to court. And we try to help rebuild those relationships, which most are severely broken at this point at this time in the pandemic. So like I said, we have the freedom to offer the money any way we want to. You can do it for rental arrears, which you have to. That's one of the main things. You can use it to do utility arrears if you choose to do it. Your utility arrears can be in many different forms. You can do it for just gas and electric, which we do here in Bergen County, or you could do it for water, sewer, gas, and electric. You can even do it for internet services in the homes. So the tenants, like I said, play a crucial role in the acceptance and the denial of the application. And that's where a lot of the issues come in when we're trying to approve these applications. So, and also the funding can go back to March 3rd of 2020. Can we go to the next slide? So like I just said, it can be used for rental assistance, utility assistance, and other housing needs. So other housing needs would be housing stability. So when you look at your breakdown of the law, it tells you you can do what your breakdown is. And most of the time it tells you that there's a 10% housing stability part of it. And that would be if a tenant is struggling, they can't afford an attorney, they're going into eviction court, you even have the option to pay for the attorney for that tenant in order to prevent them from becoming evicted. So your eligibility requirements would be the tenant has to qualify for unemployment or have experienced a reduction in household income or experienced a hardship due to COVID-19 pandemic. That statement is very, very broad. So basically anybody that puts on their application that the COVID-19 pandemic has hurt them in any way, they qualify for the program. Demonstrates a risk of experiencing homelessness or housing instability. So that means that they're in many months of rental arrears, or now they've lost their job and they're not going to be able to pay their rent going forward. And the household income is at or below 80% of the area median. So that's going to change based on where you live. So ERA 1 versus ERA 2, there's two programs that came out. ERA 1 came out with a brute force, and the federal government basically said, you got to get this money out as quickly as you can. So they're eligible recipients. The only difference between ERA 1 and ERA 2 is the second one. So you have to be less than 80% AMI, which we just talked about, the financial hardship incurred. But the only difference in ERAP 2 or ERA 2 is during or after COVID-19, where in ERA 1, it's during the COVID-19 pandemic and the risk of experiencing homelessness or housing instability. They want us to prioritize the applications if possible. So if anybody's using a system or a grant program to do this, there's ways to sort your applications as they come in. First in, first out for ERAP 1, but also if it's first in, first out, and if they're under 50% of the AMI, they're the first ones they want to go out the door. Or if they've experienced unemployment within the last 90 days, those are the ones that they want to try to help right up front. There's no changes for ERA 2 in that category, so those are basically the same. The use of funding has changed. So in ERA 1, 90% of the funds can be used to pay for the rent, the utilities, and the other housing expenses of the tenants. In ERA 2, 75% should be used for that. ERA 1, we can use 10% of the funds for housing stability services and admin costs. Most people had used that for admin costs in ERA 1 simply because the program was so new. Everybody needed a program to be able to do this unless they've used some type of community development HUD type system, if there was one. So a lot of that 10% did not go to housing stability services on a lot of the people that I've spoken to. In ERA 2, 10% of the funds should be going to housing stability services, and they have increased the admin cost to 15%. The admin costs are big in here because there's a lot of stuff that you have to do. You have to really promote this program, right? So the promotion of this program is expensive, whether it be flyers, door-to-door, canvassers, having in-person meetings, seminars. It's a lot. So that's why I think they've increased it for ERA 2, because people were having a hard time getting those ERA 1 funds out. So your max assistance under this program is you get 12 months arrears plus an additional 3 months. Those additional 3 months could be arrearage months or 3 months prospective. So if you got paid up to December 2021, we had the ability to give January, February, March for prospective rent. Once you hit that 15 maximum, you're done for the ERA 1 program. However, you are still eligible to get at least 3 months under the ERA 2 program if you still meet the criteria. And then 18 months total between the two programs, you're totally maxed out and there's no more money you can get from this federal program. Okay. Rental arrears. So the categories, rental arrears is any amount outstanding after the date the rent is due and owing. What we do here in Bergen County, because every single applicant has a different date that their rent is due. So not everybody's rent is due on the 1st. Some are due on the 15th. We have people that are due on the 22nd. Our arrearages start the 1st of the month after the date of the arrears. So March arrears becomes an arrears on April 1st. just so that we keep the program consistent. And that's the one main thing, is you want to have consistency in your programs, because you don't want anybody to come out if they audit, or if somebody does an OPA request and they find that you're taking somebody's application from February that has only been in there a couple days, and you're not doing the people that may have been in there from October, that's been in there a couple months. So you just want to make sure you have consistency in your program, so that when OPA requests come out, and we've gotten plenty of OPA requests on this program already, you have a basis behind all of the things that you're doing. The grantees must provide a current lease. So whoever we're giving the money to, the tenants, they have to have a current lease when we're doing rental arrears. And if they don't, the federal government had changed their guidelines a couple months after they initially did the program, because nobody could get the money out because we couldn't get the required documentation. There's a lot of individuals that don't have a current lease. If they're not paying, their landlords have put them on a month-to-month and have not signed a lease with them. Or they've been in the property for so long that they don't know where their lease is. So you have the option at that point to have to use the attestations or the certifications through the federal government that they approved, which would allow you to fill out a certification saying, listen, I don't have a lease. I do still live here. The landlord signs off on it, the tenant signs off on it, and then we can proceed. The important things on the lease is that the address has to show that the tenant is occupying that unit or has occupied that unit. And I say has occupied the unit because the landlords are still eligible to get rental arrears even after the tenant has moved out, as long as rental arrears were owed during that period of time and the tenant is enrolled and you have their information within your program guidelines. The terms of the lease, how long the lease goes for, because you have to make sure that the lease is covering the time of the hardship and the amount of rent per month. That's the three main factors that have to be on that lease. And they also need to be on any attestation that you provide for them to fill out. Prospective rent is rent owing but not yet due. So the program allows for up to 3 months of prospective rent to be awarded. The prospective rent can be awarded for the months the applicant still has the lease, unless a residency attestation is provided. So if the lease ended 12/31/2021, then we need something to be able to give them January, February, March. So we need either a residency attestation or a lease extension, because we can't provide prospective months if they're not in agreement to live in that property for those prospective months. Utilities, you can have the ability to pay for electric, gas, water, sewer, and trash removal. They must provide you a bill, an invoice, or evidence of payment that has an account number on it. What we do here in Bergen County is we have worked with Public Service Gas and Electric, and we have Orange and Rockland County Electric here. What we do is we provide them all of the account numbers for any applicant that's asking for utility arrears. They provide us what their arrearages are month by month, so that we have an accuracy from PSE&G themselves. That's how we pay them. So we're not putting the onus on the tenant. We're just giving them the onus to get us their correct account number, so we can find out what their 15-month arrearages is in electric. Home energy costs, so fuel or home heating oil for people who have oil tanks, and housing stability services, which we talked about before. There's a slew of things, and I touched on some of them, but you can do diversion programs, housing navigation programs, paying for attorneys for the tenants and or landlords that need assistance in these matters, legal services. So there's a bunch. If you go on to, there's a whole booklet for ERAP. It gives you all of the things that you can use for housing stability. Okay, next slide. ERA, the good, the bad, the ugly. So there is a lot of good to this program because we are helping a lot of people that really are struggling right now. There is an enormous amount of people out there that lost their jobs due to COVID. They didn't ask for it. Most people live paycheck to paycheck, so they are struggling. So we're helping a lot of people. It's great. I'm so happy when we have to do that. But then for every good, we have some bad and some ugly. And the biggest one is fraud. So we're finding that fraud and the detection of fraud is an ongoing problem in the ERA funds. So it's not like a small business program where you're dealing with professionals that have businesses that they want to keep. And in the small business program we're in, we had fraud too. And I think that's why they put that special task force together through the federal government now that's going to start investigating these frauds. But there's things that we can only do it so far, right? So we could get the information. We have to hope the information that's being provided for us, especially the attestations that the federal government had implemented, which that's where I find we're seeing most of the fraud come in. People are not fearing that they have to certify that they're putting information on there that may be false or indifferent. For some places, you have people that are parents and children that are saying, okay, my child's renting my second floor apartment, when they may not really be doing that. You have people that are not providing information of people that are living in their household. So there's a slew of things where fraud is is happening, and we can only do so much to prevent it. So the tenant-landlord relationships, that's another one. We have to make sure that we are the mediators in most of these situations. So like I said in the beginning of the slides, there's a lot of landlords that are very disgruntled towards their tenants and tenants that are very disgruntled towards their landlords. So what we try to do as we're working with our court system too, we're trying to be mediators in this program to let them know, listen, it's a benefit for both of you if you just kind of work in harmony for a little while and get your stuff together, and we can pay out whatever it is. A part of this program, especially for ERA2, in the certifications, they have to certify that they will not evict the tenant for the time period that the ERA funds are paying for. So a lot of these landlords don't want to do that, but in order to receive the money, they have to do it. And in the state of New Jersey, they put basically a statute out that landlords can't refuse to accept this money because they're violating the civil service, the civil rights law. So I have to give them that language every once in a while so that they know that if the money's there for them and your tenant has been approved, you kind of have to accept it. And if our courts, I don't know if anybody else's courts, but as long as they have a application in our program, the courts are dismissing the cases. They're not allowing the cases to go any further. So that's a good thing too. That doesn't mean they can't sue them in civil court, but they can't evict them at least. The excessive need for documentation follow-up in this program is unbelievable. So 1 out of 24 applications are fully complete with the documentation that they need. So 90% of the time, we're following up for documentation, whether it be they don't have the right income information, they don't have an ID, they don't have their household members information. So it's a lot of follow-up. It's very time consuming. It slows down the program a lot, even when you use the attestations, because people don't want to provide the attestations. So the way we do it here in Bergen County, we reach out by email twice. After we send the first email, we have callers. So we have people that actually pick up the phone and call every single applicant that needs documentation. And it's been working. The phone call has been working. I think that people are apprehensive when they get an email. They don't know if it's fraud or whatever. So once they get that phone call, they feel a little bit more comfortable providing the information that we are asking for. The other issue that we have, and I'm going to do the G-rated version of this story because John said I had to tell the story, even though I didn't want to tell the story, is people provide you things on these programs that are not what's needed. So we've got pictures of people saying, oh, my hardship occurred when I had surgery, and they're providing us pictures of parts of their bodies where the surgery occurred. There's people taking pictures in the mirror while lingerie on, and they're attaching it to the program. So there's so many things that have come through this program that it just boggles my mind sometimes. The other big issue with this program is the federal government does not define their definitions of things. So one major one is the definition of household. They do not have a definition of household in their ERA guidelines. So we here at Bergen County, because we use the HUD guidelines for AMI, we use the HUD definition for household. We had one individual who was fighting us because he thought that household meant that they had to be related. And for any federal program, household basically is any person residing in your home, whether you're related or not related, regardless of their sex, ethnicity, what your relationship was with them, that's what's considered household. So we have to try to define the the words to them a lot more, because they think that household just means that my family lives in my household with me. So you have a lot of people that are roommates that are not, they're not related whatsoever. They just live together. One roommate's paying, the other roommate is not paying, and they want to be separate entities in that home, and they cannot, because they're both on the lease, which makes them both solely responsible, which means that they both have to provide us with their income information, their ID information, and all of the stuff that is required of the program for both parties. Okay, you can go to the next slide.
So Melissa really did say she made that G-rated because the part of this person's body was something you would never expect to be submitted. We sat there and laughed about it for a long time. I do have some questions, Melissa, before we move on. The first one is, I believe this is related to yours, we turned our entire award over to the state to run the program for us. The auditors are now unsure of what we are subject to as far as audit. Is anyone else in this boat? And would the state be considered a subrecipient that needs to be monitored by the county?
I believe they are. I think if you turn the state would become your subrecipient, because to the feds, you're the grantee. So yes, they would be your subrecipient. That would be like us turning our money over to a vendor or a consulting service to push out our funding.
Okay, and this goes back to the prior one. I missed this before we moved on. The question is, if the municipality wants to use the grant funds to purchase police cars or a fire truck, do they just list it in the grant fund part of their budget as using the ARP money to fund this? Or do we do it differently?
I thought you had to use a capital ordinance for that. I thought the state was looking for a capital ordinance.
You can't just charge it directly against the grant?
I don't believe so. I think if it's a capital expenditure, you have to do a capital ordinance and use the grant funds to offset the capital ordinance for the improvement, the authorization amount.
Next one is.
John, can I jump in on that one?
Sure, absolutely. You're the auditor.
So I guess on the league meeting yesterday that came up, and I think under the loss of revenue, you can anticipate the revenue on, I believe it's sheet 10, and then separate out under your police OE line and designate. So you would have regular police salary and wage, regular police OE, and then it's almost like you would have a line called police OE dash ARP funding. And that revenue that you're bringing in would be offset by that expenditure. And because police cars would be capital, but I believe my understanding is you can charge to that line item for, I think, non-capital expenses. For capital expenses, I think everybody was right. It needs to go through a capital ordinance.
So we have one person that's one of our attendees says that they were able to get the state to allow for charging the grant directly for capital projects. So maybe the state's a little inconsistent.
Yeah, I mean, it's obviously new and evolving as we get, the final rule was a big change. So I think there's some things that are up in the air.
So we have another question. How does the tenant apply for assistance? Is it with the county or the DCA? So I think it depends upon how you're treating it, correct?
So here was one of the major issues that we had at the start of the program. The counties and the municipalities were administering their programs, and then the state was administering their program. So the state had emergency rental assistance money through the NJDCA. So they could have applied there. That was a lottery program where they were picking people at random through a lottery to pay their emergency rental assistance. The county, we have a website that's set up. Like for us, it's through Bergen County Cares. They go in, it's an all electronic approach to the application. They have to go in, register, attach all their stuff, and then we get it on our back end for review. So I guess it all depends on how you're administering your EREP funds, whether you have a grant portal, if you're administering it through your HUD department or your HUD or your community development departments. They may have a portal. So it all depends, I guess, based on who's doing it.
Right.
For us, we have a portal.
Some people opted to have a third party run the program for them.
Yeah.
Okay, so that's that question. Bill Holm is loading up our questions here. Thank you, Bill. Melissa, did you adopt a Chapter 159 last year to disperse the rental funds?
Yes, we did. All of our grant funds went through a Chapter 159 process, or they went directly into our budget before budget adoption. So we might have not had to do it. depending on when we received it. We received it in May last year. Our budget wasn't adopted by May last year. We were delayed because of the revenue loss calculation prior. We were waiting for the guidance from the state, so we just put it directly into our temp budget at that point.
Next question from Bill Home is, can the funds be appropriated through the budget process for capital actually can't read with this. Can the funds be appropriated through the budget process or for capital improvements be part of a bond ordinance? I think we just answered that. Next one is, I thought you couldn't do capital ordinance for police cars. I think that one has changed, right? I think if it's an electric vehicle now, they can be done with a bond ordinance.
And if it's an SUV, they can go through a bond ordinance. I just don't think there could be police interceptors, the regular small police interceptor cars, unless that has changed since.
And I believe you can do a fully funded ordinance for police cars, as long as there's no bonds associated with it or debt.
Correct.
Bill Home again, I adopted a Chapter 159 for the full amount last year, which was subsequently denied by the division since they were only approving half of the funds as a Chapter 159. Presently, I have recorded the ARP funds in the unappropriated reserves in the grant fund. Am I correct in my accounting?
So the way we did it, Bill, is we only put in as a Chapter 159 the amount we were approved from. So don't forget, the ARP funds are coming in 2 tranches for most individuals. So we did tranche 1 for in our budget for this year, and when we get tranche 2, which will be in May, I think, of 2022, we'll put the tranche 2 money in there, because that's when we're actually awarded the tranche 2 money, even though they're saying our full award was whatever, but they awarded it in 2 tranches.
And just going off of what Melissa said, since, you know, Bill had mentioned that he put in the whole amount and it did get denied, like we've seen that a lot. So putting it in unappropriated is correct.
All right, next one is, in this year's budget, I had the grant monies listed for purchase of items under the grant section. So is that correct? I mean, I'm gonna jump in. I think you would want to just list the grant and then charge the detail inside your grant fund, or however you're accounting for it, not put in your budget to that detail. I don't know if you guys disagree.
No, I would agree. I would just have your one line for your American Rescue Plan funds and then charge that American Rescue Plan Fund grant account. So what we do is in our regular budget document, we have it as one line, and in our financial system, we have our projects broken out that roll up into that line item in your budget document.
Bill says, thank you, by the way. The next one is a question, says, we want to donate a set amount of money to our Blue Ridge Rescue Squad for purchase of an ambulance. There are 3 townships involved in the area that use the same Blue Ridge service. We want to each donate $50,000 to them for this purchase. Does this have to go through the budget or can it be charged directly to the grant?
I don't know if you could do it as a donation. I think it has to be done as a granting, because you're gonna have to do grant reporting on the demographic uses of that ambulance. So you're gonna have to do a grant agreement for them, not a donation. I could be wrong, but I'm pretty sure I read in that 155-page document that donation, you couldn't donate. You had to do it as a grant.
Yeah, I agree with you, Melissa.
How many times did you read that document?
I don't want to tell you that.
Mike, if you can clarify your question, because he just says do as capital with question mark. I wasn't sure what you were referring to because we'd already closed them out. There's one more in the chat. Says, I think, that's from Mon. She says, I think Tina did say yesterday that it can be spent out of the appropriated grant fund. I think she's referring to the capital there. There's 2 more that popped up. Is anyone using the ARP funds to partially support a gun buyback program? I'll get silence here, so I'm guessing that's a no.
I'm thinking, I thought that you can use them but you got to check. I don't know if that has changed under the final rule.
Okay. So if we do a grant agreement, does it have to go through the budget or directly from the grant?
We do them directly from the grant. We do a grant agreement. Basically, they're going to become sub-grantees of your grant, basically.
Mike clarified his question, and he says, do as a capital donation with a question mark. Are you referring to the ambulances? And if you are, I think it's still, I think Melissa's correct that you have to create an agreement there to follow that transaction.
I think the most important thing to remember is every dollar that you give to anybody, whether it be small business, emergency rental assistance, municipalities, they're all going to be audited under the OIG audit when they come in. So you want to have all of your documentation. You want all your documentation to be consistent, because the first inconsistency is where that's going to open Pandora's box for the federal government to start looking deeper into your program. So I would say make sure you have an agreement with that donation and what you expect of them with that ambulance. Because you're going to have to get demographics data from them. It's asking for demographic data when you do the ARP reporting now, which it didn't do that under CARES. So
I think we're up to date on all the questions. You guys are good.
all
I'm
right.
going to jump in and do a poll. Sorry,
Sure.
Melissa, really
No
quick. This is on the emergency rental assistance. So the question is, for those municipalities that participated in the emergency rental assistance program, did you have difficulty with the eligibility verification process? I'll give everyone a minute to get their answers in. Okay. Okay, go ahead. Thanks.
So the last thing before ERA reporting is the reporting. The reporting is a bear. We have to both submit monthly and quarterly reports, and unbelievably so, all these reports are due the same time. So your ARP reporting, your ERAP reporting, and your monthly reporting are basically all due at the same time when they come due. So for your monthly report, they're due the 15th of the month after the close of the month. So from March 1st to 31st, that's due April 15th. And your quarterly reporting are due by the 15th of every month at the close of the quarter. So January 1st and March 1st, you're due by April 15th. Your reporting requires a lot of information. You have to have your recipient profile, your project overviews, your subrecipient. So any person that you pay over $30,000 to, landlord or tenant or utility company, they have to be cared for separately. They need a whole bunch of additional information. They need ETIN numbers or EIN numbers. So they're different, a little bit different. It's kind of like under ARP, anybody over 50,000, they need the same guidance. You have to report on the expenditures. And then after you do the financial part, you have to do a whole demographics part broken down by AMI, gender, race, and ethnicity for each category, for each AMI. So it's a lot of reporting. And the monthly reports are a little bit less. All they ask for in the monthly reports is the number of unique households and the total amount of ERA funding that you have administered. Those monthly reports are what the federal government are using to see if they're going to recapture your funds, meaning that you haven't hit their benchmarks. They're not doing it after the quarterly, they're doing it after the monthly. So, okay, next slide, I'm done.
Okay, so I think we originally put this break in assuming that the webinar was going to go for about 3.5 hours. I think we're maybe a little ahead of schedule. So what are you guys thinking? Like, do we still want to take maybe a 5-minute break, or would we like to just keep going?
I think we could do a break. I think there's a couple questions if we want to do that before.
Yeah, let's do the questions first, and then we'll give them a little bit. They can stretch their legs and get a cup of coffee or whatever. Next question is, when you present multiple local governments, when you represent multiple local governments, what is the best way to access the Treasury platform for reporting? I've used ID.me, but I'm having issues with Treasury recognizing multiple agencies.
I think we're actually going to talk about that in a little bit.
Okay, Chuck, we'll get back to you on that one. The next one is for the gun buyback program, we would need to provide cash. How do you suggest turning the grant funds into cash?
Well, we have done gift cards, not cash. So we have done a lot of we have done Amazon gift cards for some of the stuff through the ARP program, or gift cards. I would probably say you should do gift cards, not cash. I don't know. I don't know if cash is allowable. I would have to go back to the final rule and look at that.
I would think as long as you have an accounting for it, you could issue, and I think we did that here, Melissa, for the prosecutor's office. They did the gun buyback program, but not through ARP. They did it through their funds, and we were able to get the cash directly from the bank, and they did a full accounting for it and then deposit the net. Okay.
You would still have to figure out, you would still have to justify, because under ARP, they require project justifications. You would need to justify how the gun buyback program was directly related to the negative impacts of COVID-19, though, I would think. I don't know. I don't know how that would be justified.
So I think you can make something up, because domestic violence actually increased during the pandemic because the husband and wife were home a lot more together and it didn't go so well.
Correct. I guess it all depends on the area that you're in. I don't know.
Okay. All right. So how long do we want the break to be? It is 10:10. Want to just give 5-10 minutes?
You come back in 10, that sounds good.
10 minutes is good. All right. So 10:20, we will come back. Good. Yeah, no. More calls about it. Yeah. All right, I was told I was hamming it up with the Jeopardy there, but I got a bunch of texts that people were amused. So another question we just got here is police salary an allowable category for ARP, or does it have to be for OE only?
Yes, under the revenue loss category, it is eligible. But I would caution people that if you're going to use it for salaries, the money's going to end. So.
All right, I think we're ready to keep moving. We're now at 10:20.
Okay. So the last category under the ARP is the investments in water, sewer, and broadband infrastructure. So for water and sewer infrastructure, you can use the funds for projects eligible under the EPA's Clean Water State Revolving Fund and projects eligible under EPA's Drinking Water State Revolving Fund. And then you can also use it for some additional projects deemed necessary if you meet the following. First, it has to be responsive to an identified need to achieve or maintain an adequate minimum level of service, which may include a reasonable projection of increased need, whether due to population growth or otherwise. It has to be a cost-effective means for meeting that need, taking into account available alternatives, and it has to be for investments in infrastructure that supply drinking water in order to meet projected population growth, projected to be sustainable over its estimated useful life. And then some examples of the projects that you could use it under the third category would be culvert repair or replacement, stormwater infrastructure upgrades, infrastructure to improve access to safe drinking water, dam and reservoir rehabilitation, or a broad set of lead remediation projects eligible under EPA grant programs authorized by the Water Infrastructure Improvements for the Nation Act. Okay.
So I'll just jump in and share another quick client story, a different use of these funds that we've seen. So I have another township who their longtime goal was to build up their town center and provide community growth at the hub of their community, of their township. And this township has aging utility lines and several vacant pieces of property. So they want to hone in on this infrastructure plan, and their goal is to entice businesses to come to town center, which their hope is this would in turn bring residents to town center, support that town center growth, maybe keep dollars within their township community, et cetera. So with this infrastructure project, they're also really investing in their future. They want to, like I said, continue to build up their town center growth. So for them, this is a long time project with long time benefits.
Okay. So then for broadband infrastructure under this category, there's a few things that you need to achieve in order to use it, the funds for broadband. First, you have to identify an eligible area of investment, and this could be a lack of access to reliable high-speed broadband connection, a lack of affordable broadband, or a lack of reliable service. And once you identify an eligible area, you design projects to meet high-speed technical standards. And in order to use the funds for this, you need to have at least 100 megabits per second download speed and 20 megabits per second upload speed. And then lastly, the service provider must either participate in the FCC's Affordable Connectivity Program or provide access to a broad-based affordability program to low-income consumers that provides benefits commensurate to ACP. And then lastly, under this category, you can use it for cybersecurity investments. And this is pretty broad. You may use the funds for modernization of cybersecurity for existing and new broadband infrastructure. There's no speed delivery standards required, and it includes the modernization of hardware and software. And then before we move on, I didn't know if anybody had any questions or anything they wanted to add.
I'm going to launch a poll in the meantime. We have a question about using it for water. And so this next question is, will your municipality be using ARP funds to invest in water, sewer, and or broadband infrastructure projects? And I'll leave it open for about 30 more seconds for everyone to get their answers in.
All right, while we're waiting for those answers to come in, I have a couple more questions. First one is, are security systems an allowable expenditure under the grant? For example, security cameras for municipal and police buildings.
I believe they would be under the revenue loss category.
Okay, does everybody agree with that? We got a yes, Angel, so you didn't get outvoted. Next one is from Matt Larissy. Can we use ARP money to fund better break music instead of Jeopardy? Thank you, Matt. That's great. Next one was, and we've answered this previously, yes, the PowerPoints will be available. Caitlin, do we know if they're going out with the email with the credits?
Maybe Katie could answer that one.
Yeah, I can include the PowerPoint slides in the follow-up email with the recording and the survey for everyone. So you'll all get a copy of the slides.
Perfect, thank you. Can the funds be used?
I just want to add to like a lot of the capital questions, like reading through the text, it seems like the feds were more telling you what you can't use it for versus what you can use it for. It's they're very specific as to their no's, but we're not as concrete in their yeses. So it seems like they gave a lot more flexibility with what is a government service. As long as we are providing the service or purchasing the item, it seems like they kind of grouped that as a government service. So I think in terms of their goals, like they just really wanted to make sure that definitely you cannot use it for this. It kind of seems like they were more trying to send a message and a goal through their no's versus their yes.
Yeah, and I think to add to Julie's point, the biggest thing is you got to make sure you just keep documentation on everything you're doing. So why you did it, the reasons why you did it, how you felt that it was related to ARP or how ARP funds were eligible to be used for it. Always keep your documentation because that's what's going to make or break you when you have your federal audit.
There's another one, and it's really getting specific purchases. They're talking about, can you use it for first responder vehicles for the radios, for upgrading radios? I think as long as you can justify it, you're fine. Is that correct?
And I think they added that to the broadband section of the ARP funding was radio transmissions.
Was that in those 150 pages that you read several times?
No, this is under the final rule. They added this under the final rule part. I didn't read the whole final rule yet.
That's 400 pages.
You guys are great.
Yeah. I did the Cliff Notes version.
So the next question is, can the funds be used for a town-wide water meter upgrade to radio read meters?
I'm not sure if it would qualify under this category because you'd have to prove that you're responding to an identified need. But I believe under the revenue loss category, it would definitely be eligible.
I know that a lot of people are using it now. Like a lot of people that got this money are using it to switch out the piping for lead. So they're using. I think Newark, I believe it was Newark, was doing a big change out using funds to get the lead pipes out, put new piping in. They identified that as a desperate need for this infrastructure funding.
The next one I think is a little bit of a stretch, but you guys weigh in. It's just, can we use the funds for a wash station for our public works garage?
What, a watch station meaning what?
Wash. So you're required to wash down your vehicles in order to do it.
Oh, I think you said a watch. I thought send somebody to stand there and watch the station. I was like, I don't know. I don't think so.
Maybe
I don't know I don't think so. I don't think that would be eligible because, I mean, if it was like spraying down the inside of the cars or something, maybe, but.
No, this is washing a vehicle. If it came to my desk with a justification, I would say no under our program. I don't know about how you guys feel about it. But so normally when we're doing the roundtables in person, we've got Bill Homer raising his hand. So he is now just popping the questions up. So he's great. He says, I've had trouble submitting the report through the U.S. federal government system for award management system, SAM. The access was previously set up by our retired police chief. I do not have the password to get in. I'm not sure what to do.
So we actually had something like this happen in Randolph. We actually couldn't figure out who was considered the SAM person. So we had to write an affidavit and send it in to their support people via email. And there's a couple other things that we had to add to it, but I'd reach out to their support to see what they require.
If you know the individual who was registered under, that's better for you, because then they can look up the email address that's registered and you may be able to change it. But Angel's right, you're gonna have to do an affidavit to get it changed, which is kind of crazy because it's a governmental sign on, but they make you go through this whole entire step, all these steps to get it changed.
Last question is there a contact name or number for the federal government if you are having issues with login.gov and reporting? They say that there's an email, but responses are slow and or non-existent at times.
Well, that's one of the major issues with this program. The federal government can't keep up with the needs of the grantees for questions and get back to us. So I was explaining to the ladies on our call the other day, I have almost 8 or 9 emails out to the federal government right now on ERAP, and nobody has answered me for the last, I don't know, since January. So it's a little disheartening. For login.gov and ID me, you can call their help desk directly and they will help you. You don't have to go through the federal government, the Treasury for that. So if you're having issues with signing in, they can help you at the ID me contact information or the login.gov help desk.
And we have one more that just came up is in the instructions to register, they're asking for an account admin, point of contact for reporting, and authorized rep for reporting. And this person says it all seems to be them, just one person. Do we have to have 3 different people?
We're going to go through that when we do the reporting section. So let's hold on for a couple more minutes.
All right, Sharon, if you can hold on for that one, we'll get that later then. Oh, we have one comment says that this thing reminds me of FAST. All right, then all questions are done.
Okay. All
And
right.
did you want me to speak on this or?
Sure.
Okay. So just there's like we were saying earlier, there's just a few restrictions that you cannot use the funds for. So you can't use it for an offset of reduction in net tax revenue, can't deposit into pension funds, you can't use it for debt service or replenishing financial reserves, and for satisfaction of settlements or judgments. And then you can't use it for a project that conflicts with or undermines the purpose of the American Rescue Plan. So just when you're using it, especially under the revenue loss category, just make sure that you're not using it for any of these, because these are the things that they made very clear that you cannot use the funds for. So. Okay, now if you want to go on.
Okay, so for the next few slides, I just thought we would take a auditing perspective, and I'm just going to kind of walk you through what it's going to look like in your annual audit, and like I mentioned on our index page, what happens if a single audit gets triggered. So here on this slide, I put together a sample of what the ARP grant will look like on your SEPA, which stands for your Statement of Expenditures of Federal Awards, which is also commonly known as your Schedule A, which is the very, very back of your audit. So I just kind of wanted to, I'm going to end up flipping back between this slide and the next slide, so bear with me, but I just thought it'd be useful to maybe go through each of these columns so you know where we get this information from, where you can get this information from. And obviously some of it is going to be pretty obvious, like for the example, the first column, at this point in time, we all know that this funding is coming from the Department of Treasury, but if we look at like the next 3 columns, which are the CFDA number, the formal title of the grant, and also the account number, I mostly get these, let me flip over. So like I said, I'm going to flip back and forth, but this information I usually pull from the GN06 report. So this report comes from the state and it identifies the difference between state and federal pass-through grants. So this document for me especially is just very useful because I immediately go to this and there is a specific column for the CFDA number, which if you're not familiar with that is really just a way for them to catalog every individual federal grant. So as soon as I see that, I know this is federal funding and it's required to go onto your CEQA schedule. So that information, flip back, I use to populate those 3 columns. For the grant award column, you'll notice in this example, this is both sets of allocations that are coming through. So again, this part's pretty obvious. We all know that the first allocation came in 2021, which you can see under the receipts column, and that the second allocation will be coming in 2022. For the grant period, I did want to hone in on that for a little bit because as you can see, it's very unique. The start of this grant period dates back to March of 21 and will be extending through 12/31/2024. That date is when all of your expenditures for the grant need to be incurred by. You actually have until 12/31/2026, which I'll flip back, so it's highlighted right here, in which all of your funds must be obligated. So it's giving you a little bit of extra time to liquidate all of those funds. So pretty lengthy grant period, which we'll touch on the importance of, you know, why that's so long and what you need to look for in that long period. And then back to that receipt column, I did include a link here. I'm sure we're all familiar with this PDF, but it does include all of the municipalities in the state and their funding for both allocation 1 and 2. And if I just flip back again, I did also want to talk about the current year expenditure column that I have here, which if you notice is completely blank. So I think this is going to be a recurring theme that we see a lot this year because this is a brand new grant and when it came out, there wasn't a lot of funding. I think a lot of people were just being very cautious, doing their research and having discussions and determining what they wanted to use the money on, but not so much spending the money yet until they were fully knowledgeable in you know what was allowable and unallowable. So for this example here, this specific client is doing their water infrastructure project. They have the capital ordinance ready to go. The project just hasn't started yet, thus no expenditures yet. Okay, so actually, one more very important thing I wanted to talk about. So this current year expenditure column is the sole thing we look at to see if a single audit will get triggered. So that magic threshold number is $750,000. As soon as you exceed that number, a single audit is required and must occur. So I wanted to give kind of an example, like, you know, if you are, let's say, a client that routinely gets maybe CDBG federal money, maybe some federal NJDOT money, and you typically spend about $600,000 in federal grants. Well, you know, now that you've, in this example, just received 2.3 million, as soon as you start spending that and you are already so close and on that cusp of almost having a single audit, this might put you over and you might not have had a single audit in the past. So that might get triggered now. So I wanted to also go over what happens when that occurs. So typically, the government puts out a uniform guidance compliance supplement once a year, and this occurs around July, August. It's on the whitehouse.gov website, so anyone can access it, follow along. It is 2,000 pages long. It's very daunting, but back to before when I was explaining what the CFDA number is, the compliance supplement is organized and cataloged by CFDA numbers. So that's why it's very important to know what your federal grant identifying number is. You can go straight to that subsection within this very lengthy document and read about all the audit requirements that, you know, are set for that. So on top of that, we've seen addendums being released lately, specifically for COVID-related funds. So if a single audit is triggered, it's just really important to note that both the Uniform Guidance Compliance Supplement and the addendums need to be used together for your audit. So on this screen here, this is the matrix, what they call in their compliance supplements. So for every federal grant, they list out all the audit requirements and mention which ones are applicable. So this is specific for the ARP grant fund. So I just figured we'll go through each one and mostly talk about the yeses. But Katie, if you want to launch that one poll question before I start talking about each of these subsections.
Yep, I was just gonna say, okay, so this polling question is, can you use the ARP funding for deposits into pension funds? I think we went over this a couple slides ago. And Caitlin, I think I had another one right after this pertaining to what you just went over. So I'm just gonna do a second one right after, if that's all right with you. All right, I'll give everyone a second to respond. Put your answers in. Okay. I think the answer was no. And then this next one is, will ARP grant funding affect the possibility of your municipality being subject to a single audit? Leave this open for about 30 more seconds and everyone can respond.
All right, while we're doing that, we have two questions that popped up. One is, if you use ARP in a capital ordinance and there's money left over after your purchase or your project completion, do you cancel the fund balance or does it go back to ARP? I think that's an easy one. It goes back to ARP. You can't take the money off the top.
Yeah,
The
and
next one,
we'll talk about that briefly.
okay, and then the next one is again from Bill Homa, which I love hearing from Bill. Bill, how you doing? As part of the audit, will you be reviewing the required expenditure reports? I've been unable to submit these reports through SAM. Will this trigger a comment and recommendation in the audit?
Reporting is an audit requirement, and I'll talk briefly on it in a little bit, and then Melissa actually has pretty in-depth on how to do the reporting. Maybe it's not spitting out right now because I think the first one is due the end of April, so maybe it's the system's having some glitches right now, but you know, part of the reporting requirement is us looking at completed and timely reports. Was that it?
Yeah, I think you're good to go, Caitlin.
Okay.
Are you waiting for me or are you guys gonna move on?
We will move on.
Okay, thanks.
Okay, let's see. All right, so I'm just going to leave it on this slide. I didn't make separate ones for each of these audit requirements that we're going to go through, so just kind of bear with me. So the first column, as you can see, is for allowable activities. So obviously we have previously discussed this at length for all the prior slides, especially the ones that Angel went over. Those are all allowable activities under the grant. I did want to point out in terms of internal controls that you as your municipality or organization, you should be ensuring that funding decisions constitute eligible uses of the funds and that you document all determinations. So here I wanted to stress again about documentation that Melissa has brought up previously, but it is a very long and lengthy grant period, and there is a possibility that during that time frame, several personnel will be coming and going from your municipality. So it's just really important to maintain clean, concise paperwork that can be reviewed at any point in time. The second audit requirement is allowable costs. This I like to break down into 4 different subsections. So first, administrative costs are allowable. These could include consulting for the effective management of the grant or to ensure that you are complying with legal and regulatory requirements. You can also charge direct and indirect costs. So a direct cost example would be something that is directly benefiting the project at hand, like supplies or materials, and indirect costs would be something like overhead. You can also charge certain salaries and benefits. Again, we talked about this previously in some of our slides. And then also you can charge a reasonable amount to your audit fee, basically, if this has triggered a single audit. The next few are no's, so I'm not going to spend too much time on them, but I did want to point out with cash management, you are allowed to put this ARP grant funding into an interest-bearing account. So the interest that you make off of this is not required to be returned to the Department of Treasury, and also that interest that is generated is not restricted or limited to eligible uses under the grant award. Also, if you decide to purchase any type of equipment, I just want you to make sure that you are using it for its originally intended purpose. And it's also very important that on your fixed asset listing that you indicate whether or not that specific piece of equipment was purchased using federal funds. The next column we have is period of performance. Again, we've already talked about on the previous slide the very unique and lengthy date of this grant. But as I think someone had just questioned, if your funds are not expended by the end, which would be 12/31/2026, since you have that extra amount of time to fully liquidate and expend, if you have not done so, you are required to return those funds to the Department of Treasury. So you have plenty of time to get to that, and there should be no reason that you don't fully expend it, but I just wanted to point out that it is required to go back.
Caitlin, I had a question about that. Would you consider if a capital ordinance was done that is obligated, or would you say that we have to have it obligated by the vendor to a vendor for the product that we are looking to purchase?
Well, I guess for me, for the capital ordinance, I'm reporting that on like a cash basis. So are you saying like if you had funds encumbered to a vendor?
Yeah, would you consider obligated that we have done a capital ordinance and the funds are in capital, already, allocated by the ordinance, or would you consider obligated that we have a PO cut to the vendor that we have an obligation with a vendor versus an obligation?
I would say the second one, unless Ray
Okay.
wants to join in, but I would say it would need to have some type of identifying PO, check number, etc.
Okay.
Procurement is definitely a big one. And, I sat in on like 2 other webinars with this, and I know we've talked about this at length. So there's a few things here that I really wanted to point out. So there are, for procurement, state and local procurement standards are not always the same as federal standards. Federal standards, which are identified in the Uniform Guidance Compliance Supplement, are usually much more restrictive than state and local standards. And in this case, we're just advising everyone to just go with the more restrictive standard. It's the safer way to go, especially with co-ops. If you're using a co-op, to utilize any of this funding, it's important to just do your research on the co-ops. Most of the time they're following state and local law and not the federal procurement law. So just be cautious and careful when using a co-op. Let's see, you also want to ensure that you're not handling anything with suspended or debarred parties. And going back to how lengthy this grant period is, I would suggest maybe printing out the debarment list at certain periods of time, because if you are handling anything with a vendor right now and they are not debarred, that's not saying that down the road they would be. And I don't know if you would be able to access another debarred list years in the past at that point in time when you originally dealt with them. So I just know this is something that comes up a lot with procurement. So in terms of documentation, I think it's just a very good idea to print out various debarred lists to ensure that you're following that procedure. For reporting, this grant has requirements for actually 3 different types: financial performance and compliance aspects. Melissa has a lot of good informative slides coming up on that. So I just wanted to point out here that it's important to maintain your accounting records that are accurate, compliant, in accordance with appropriate accounting standards and principles. And this really goes hand in hand with internal controls and making sure that you have staff that is able to complete and have timely submission for these reports. I know segregation of duties, internal controls, it's usually a hot topic within people's organizations, and making sure there's multiple levels and reviews. So Melissa, I don't know if you want to maybe chime in a little bit and maybe just kind of go through how you're making sure that these reports are completed in a timely fashion and, you know, with all accurate information, just as a brief example.
So what I do, since I'm basically the one that does it all here for Bergen County, is we have a process up to the reporting. So everything has to be approved by our team internally. When we get onto the federal website, I put everything in. I have somebody review it outside of the program, and then I go in and approve it, because the way the registration is in the portal, it's very hard to get multiple people signed on with ID Me and getting them registered. So I basically do it all, but we have steps outside of the portal that we make sure show the segregation of duties, that somebody else is approving the report, even though I'm uploading it and I'm approving it within the portal. So if you're having an issue with people being able to register, that's another option that you can do. The federal government in the ID.me plus Treasury, that portal, they don't require you to have different people. You can have people do the same task, because I do it. They have allowed me to do it. But I think internally you should have someone doing a double check, whether it be somebody double checking, entering the requisitions, double checking the requisitions that you're putting into the system, having their projects approved by a team or your administrator or somebody, so that everybody knows what's going on within the grant. And that should not solely be on one person within the whole organization to be approving the projects, accounting for the projects, reporting on the projects. You have to have some type of people within your organization that's helping make those decisions, especially on something of this magnitude.
Yeah, like Melissa said, I just wanted to stress it's very important to just have that double check feature. And then the last one I just wanted to go over was subrecipient monitoring. So for this requirement, it's important to manage and monitor to ensure your subrecipient is also compliant with this grant. So some examples of how to do that, you know, just researching their prior experience with managing federal funds, previous audits they might have had, their personnel, and if their personnel is of that skills, knowledge, and experience, and any type of policies that they might have for award execution or oversight. And then you should also just have written documentation with your subrecipient. All policies should be written, and this will assist you in monitoring throughout the process as well.
And Caitlin, one thing I can add to that is we make all of our subrecipients report back to us as if they were reporting back to the Treasury themselves. So we give them guidance on what they need to report back to us based on the guidance of what we have to report to Treasury, so that we know that we have their documentation for our files when the OIG comes in. So they are required, as part of any grant document we do with our subrecipients, to report back to us on the categories that we're telling them to, provide us with their receipts, show us that they are spending the money. So we make them report back up as if they were administering a grant for a grant program.
Which probably makes it so much easier too, right? Like it's in the same format. You're not hunting them down for anything extra. You already know what you need to get. Correct.
It does make it easier, and it makes them aware that that we're just not giving them the money for them to go do whatever they want with it. They have to follow the guidelines. So we just did this one with our food security task force. We gave them all grants. We upfronted them the money through the grant, so the grant agreement, once they signed it, we gave them the money, but now they have reporting requirements, and they know that if they don't satisfy those reporting requirements, they have to return the funds to the county by a certain date and time. So
do what Melissa's doing. Okay. And then before we switch over to Melissa, I know the slide is very small, but I just wanted to point out that, obviously our whole presentation today is discussing the final ruling, which does become effective for April 1st, but there's no need to really wait and implement these things until that date. Like, you can obviously start complying right now. And then I think I'm ready to switch over to Melissa.
Before we move on, I'm going to do another poll on what Caitlin just covered. So this question is, which do you think will be the hardest audit requirement to meet for your municipality? So these were some of the things in the chart. Caitlin just went over. I'll give everyone a minute to respond.
We do have another question. Says, I apologize if this was already discussed. We have our ARP funds set up in our grant fund prior to the final ruling. We have also introduced our budget. We've been charging our ARP cost to the grant. Our consultant indicated that we would be better served to use the revenue loss option opposed to other expenses. The latest LFN suggests we use Schedule 10, not grants. We will have to amend our budget to show the uses and report revenue on Schedule 10, even though we have already appropriated in our grant fund. Actually, it was a question. So will we have to amend our budget to show the uses and report revenue on Schedule 10? I think that's an auditor question. Caitlin, pressure's on.
I feel like we maybe talked about this already when Ray jumped in. Ray, was this similar to the question when somebody had already submitted one version and wanted to backtrack to the other version?
I think so. Right. So I think you can still use the revenue loss calculation to support your expenditures out of the grant fund. I think the use of Fund 10 would be to have an offsetting appropriation running through the budget if you were doing something like premium pay or had some other type of losses that way. But I think because you've already introduced your budget, I think expending it out of the grant fund would be fine. You just need to have the support of the revenue loss or be able to prove that it's related to revenue loss as far as, you know, when it's audited. Was that clear enough?
I don't have any opposition to it, so they're good. And this is an anonymous attendee. I hate when they're anonymous. We can't call them out. So next question is, can you access the quarterly report at this time? I am only seeing an option for monthly ERA reports.
You should be able to. I think they open them up. I think they open, maybe not. They might open them up on around the 15th of the month before.
I haven't seen mine yet, only the initial. You have to re-upload all of those documents we sent to the state in the federal portal. That's all that it gave me the option to do through the login.gov.
Okay.
But I thought that the last time I did it, I was able to, maybe they changed something maybe they're changing something to the reporting. Maybe that's why whenever they change something to the reporting on the federal government website, they close everything down. So you're not allowed to do anything. So they may be updating something because of the final rule. April
Yeah,
30th.
I think I read something in the local finance notice that there's updating the report and it should be up soon, but it's not up right now.
Yeah, they did that. So they did that the last time under CARES when they had to revamp the CARES report. They shut everybody down. You couldn't do anything. Even if you started your report, they wiped out your report. You had to start it again. So if anybody did start it, I feel bad for them at this moment.
So I'll ask a quick question. So is there different reporting between somebody who's a NEU and a non-NEU? I believe there is, right?
Yeah, there is different reporting for depending on your category.
So I'm just wondering out loud here if maybe because Bergen County is are you a non-NEU? Is that right? Do I have it backwards?
No,
Whatever it is, you got a big grant and most people got a smaller grant. So maybe I'm wondering if the reporting is different for the NEU and non-NEU right at this point in time, maybe.
And there's a possibility because we have a lot more to report on dollar-wise.
Right.
So there's a possibility that can be. I mean, we got $130.5 million our first tranche. So it's a lot.
I would say that's a lot bigger than what most municipalities got.
Yeah. Personally, I wish the federal government would stop sending out all of this money because it's a lot of money. It's a budget by itself, believe it or not.
It's a lot to keep track of.
Yeah.
So we have another question. Do you need to re-upload the original reports?
Re-upload the original reports.
Do we need them to clarify that?
Yeah.
All right, I'm gonna leave that question up until they re-clarify it.
Yeah.
The other one is, actually, I think this is for Bill Homa. It's more of a response for you, Bill. Just says, hey, Bill, we submit reports via ID Treasury, not SAM for the federal government. She gave you the URL. so that you can access it, Bill. So I'll leave that up there and the questions until you get it. Do we need to apply for the second tranche?
I don't believe you do. I think they're going to give it to you 1 year after the date that you got your first tranche. So whenever your money came into your account under your first tranche, as long as you're following the reporting requirements and you're doing your quarterly reports, they will release your second tranche 1 year from that date. So for the County of Bergen, it's going to be May 1st because we got our first tranche May 1st of 2021.
So in follow-up to that question about re-uploading reports, it said it was a question in response to Julie saying that is what she saw on the portal.
Yeah, when I logged into the portal, there was one line available for me. And when I clicked on it, it was the same 3 documents that we sent to the state to get our first tranche. So I just had the PDF saved and I re-uploaded them and it was completed. I'm not sure if they sent any notices out that they wanted those reports, but when I logged in to try to get used to the portal, I saw it. So I just completed it. It was really easy if you have all that stuff saved as PDF, just to get it out and have it marked as completed.
I think we're done with questions then.
Okay. So the big thing that changed between if you had CARES funding to having ARP funding is the identity checks in order to get your login for ID.me plus Treasury. So the way I've been explaining it to people is when we got CARES funding, it was like walking into a municipal building, right? You just walk into a municipal building, you see security guards, you wave, hi, you go in, that's it. Not much to it. With ID.me plus Treasury, it's like you're walking into the US Mint. You have to like give up all of your credentialing, your social security number, where your address is. You have to do, there's so much stuff you have to give them. And people at first were very taken back by it because they're like, well, if I'm doing this on behalf of my county or my municipality, why am I giving them my personal information in order for them to verify my identity? So in the beginning, a lot of people were very hesitant to do it because they were like, I don't think that a lot of people didn't want to give up their own personal identity because they didn't know what they were going to be doing with it, right? So ID.me plus Treasury is what is required of you to register for in order to get a credentialing to get onto the SLT website, which is where you do your filing for the federal ARP or your ERAP or any of the new federal programs that have come out. What you have to do in this case is you go on first, you go on to the portal.ustreasury.com, you create an account, you put in an email address. That email address, they're going to send you an email saying you have to verify that email address. You got to do a 2-factor authentication where you're either going to get a code on your cell phone or you're going to get an app, an authenticator app on your cell phone that you have to use in order to get into the website, right? Then it's going to send you another email about ID.me and how you verify your information through ID.me. So ID.me is not technically the federal government. They're a bureau that they use, an outside bureau that they use to verify your identity before they give you credentialing to get into the portal. They want to make sure that you are who you are, that you're not going to be somebody like a hacker or somebody going in and grabbing information off of the US Treasury website. So when you go to start doing your credentialing, you have to have an official photo ID. So it has to either be a driver's license, a state issued ID, a passport, or a passport card. You're going to need your cell phone because you're going to have to take a picture of that card. So you're going to hit a button. They're going to send you a text on your cell phone. There's going to be a link. You're going to click it. It's going to bring you to a place where you take a picture of your photo ID. You hit the button and then it uploads it and you'll see it come back on your computer screen if you're working on your computer to do it. And then you hit submit and then it'll tell you if your ID is okay or not okay. After you upload the video ID, there's a next section which is called a video selfie, which you have to take an actual selfie of yourself on your phone, of your face. And it's one that you have to turn from side to side a little bit, and then you upload the video selfie, and that's your second part. After that, you're going to be required to go to their next step, which is you're going to be entering your own social security number. So you have to put that in. And once all that information has been uploaded, you're either going to get a confirmation email saying everything has been confirmed, or you're going to get an email stating that you have to meet with a trusted referee. So I had to meet with a trusted referee because for some reason my documents weren't taking. So what happens then is they send you a link to a video call with a trusted referee of idme.com, and you have to hold up your documents, your physical documents, to the screen while you're on the call with this referee. So I had to hold up my photo ID. I had to hold up a copy of my social security card. I had to hold up one of my statements showing that my address matches. So it becomes quite a pain in the butt when you have to go through it if you don't hit that verification process at the first time. And I don't know how many people have done this, but I've heard a lot of people in the beginning were having a hard time and had to meet with these trusted referees. Once you meet with the trusted referees, they confirm everything, and then within 20 minutes, you have an ID to get into the portal. So sometimes it's easier to work with the trusted referee because it comes quicker. They release it a lot faster than going through the actual process where the confirmations have to be done. So the one thing about this is I'm guessing that the federal government really didn't think out the fact that you're going to have consultants and CFOs that work for multiple agencies and multiple towns doing this stuff, because it does not allow you to verify your identification twice with different email addresses. So you're only allowed to verify once. So if you're having that issue, you're going to have to contact them, and they will walk you through the steps on how to do the collaboration of the ID, so you can use it to get into all of your municipalities and stuff, but they do not provide you that guidance online. You have to speak to a support team member, and you can't call them on the phone. Of course, with anything with this treasury, you have to go to their website, the IDMe website, and put in a request, and they will call you back and walk you through the process of how to do that. So I know somebody had a question before that they're having a problem with identity verification on multiple accounts. You cannot verify the same identity on multiple accounts. So you're going to have to go to the website. You're going to have to put in a request. They're going to have to call you back, and they're going to have to walk you through on how to merge your accounts so that you can get into all of your separate municipalities. So even if you're trying to do it under multiple email addresses from all your municipalities, once you hit that verification process, it's going to continue to deny you. It's not going to accept your documentation because you have already been verified. So that's one thing I think that the federal government did not think out in this process. And I think it's because they're at a very high level. They don't realize how things work on the lower levels, on how we are octopuses sometimes and have multiple people that we work for, especially auditors and sometimes CFOs. So I think that's one of the issues that have to be addressed in this program, because people are going to be late if this is their first report that they're submitting.
So Melissa, we just got to request it. Can Melissa go over what she just said again?
The whole thing?
How about Christine, can you be a little bit more specific? In the meantime, I'm going to go over some questions.
Okay.
Which I think answers this one. What if you work in 2 different townships? You just got to have 2 different logins, right?
And you can't. So that's the problem. So they're going to have to contact IDMe, and IDMe is going to walk them through on what they have to do for the credentialing at that point. And then there might need to be a call with the United States Treasury, because they may have to link every single one of their municipalities or counties that they work with to their one IDMe trusted account.
Right,
Can I just jump in here?
Sure.
On the league call last week, they were saying that that is a question that they have in with Treasury, and they're going to try and change it so that you can go through the process without having to reach out to them and all of that. So hopefully it's being addressed.
Yeah, the only issue I have with that is that they take so long to get back. I worry that people are going to miss their 4:30 deadline because it could take that long, so I would just be proactive and start reaching out now if you're having that issue, so that it's on record that you have no way of getting into it in order to file your reports, because you just can't because of the way they're set up.
Next one is the email we received says you don't need to go through IDMe.
Well, that is if you go through login.gov. If you're using login.gov, you don't have to do IDMe, but I don't think you can do ARP funds through login.gov. CARES funds you can. I just finished up with CARES funds, but none of my ARP information is under my login.gov account. So
Bill Home was funny this morning. He says, I will be retiring July 1st, 2022. Can I wait until the new CFO is hired?
You're gonna miss one of your reports if you do. Almost 2 of your reports.
funny. Next one is it better to contact them before you set up multiple accounts or set up first and then contact them with all the other ones?
I would contact them first because maybe they can help you with organizing it under one login before you go through the process of going through this and getting all your denial not accepted emails, because you're going to get them that they're not going to accept or verify you.
Does it have to be the CFO that sets up the account?
It doesn't. It doesn't have to be the CFO. So the accounts are under me here as treasurer in Bergen County. It could be your administrator. It could be your CFO. It could be a consultant. If you have a consultant working on the reporting for you, it could be your auditor if the auditors are working on the reporting for you. I don't know how many auditors are doing that, but anybody that's doing it. But you should have one person. If you have an outside person working on your reports, you should have one person within your organization that does have a sign-on to it.
Next one is I've uploaded the first two documents, award terms and conditions, assurance of compliance. What is the actual budget document they're requesting? Says that we have not yet appropriated funds under ARP. It is currently in the unappropriated grant reserve.
Well, that's what the budget document would be. With the budget document that they're asking for under the reporting, which we're going to get into on the next slide, which I guess we can turn there, not the next slide, the slide after, is that they are asking you, how are you budgeting your funds for the art money? I think they want to see if you have what your progress is actually going to be.
Okay. And then the last one is, do any of us believe Bill Homa is actually going to be retiring? He's going to stay home and pet the dog. All right, that's it for questions for now.
Okay, so the next part is the grantee reporting requirements. So once you get into the portal, you do all your ID me, you're verified, you got granted access. Now you have to make sure that your sam.gov requirement is up to date. So sam.gov is where you have to go in and register your EIN number and all that good stuff. That's the major requirement. One of the major requirements of ARP funding for the reporting is you have to have a active registration in the system of award management system for the federal government. Your record keeping requirement. We've talked about this multiple times throughout this slide, but your organization must maintain the records and the financial documents for 5 years after all funds have been expended or returned to the treasury. I would say maintain your records until you know that the OIG is not coming back to you, because they will come back to you multiple times during the audit process. And that's why I said, make sure your documentation is on point. Make sure it's well organized, it's in one place, and it's consistent. Because the minute the OIG comes in, and I don't know if anybody has ever sat through an OIG audit, but I have, the minute they come in, they're going to look for that one inconsistency. And that one inconsistency could mean you don't have a justification for one of your projects, or you're missing a purchase order, a signed purchase order, or a signed document. And once that happens, and that's when they're going to start opening the door to start scrutinizing your other documents and your other programs. So make sure you have all your ducks in order and all your documentation is consistent throughout every single project. The projects are going to be different, but your documentation should be the same, right? You should have your justification. You should have your purchase orders, your canceled checks, any of your invoices, any of your quotes or any of your contracts. Make sure they're all in one area, all together. It's the best way to get through the audit as painless as possible. Caitlin talked about your single audit requirement. There's also a single audit, that's the $750,000, and your civil rights compliance. So you're dealing with federal funds. Federal funds comes with a civil rights compliance, and that one not only on your part, but it's on anybody that you grant money to too. So we have to make sure that we're not granting to anybody that has a federal complaint against them for discrimination. So we just got to be careful because we are dealing with federal funds. This is not state funds, but anytime you're dealing with any governmental funds, we want to make sure we're careful with how we distribute those funds and take care of those funds. Okay, next slide.
I'm going to do a poll really quick, Melissa. Sorry, just before you move on. Sure. I think he's going to talk about this too. So the question is, are you ready for the quarterly report due on April 30th? And I'll give it about 30 seconds for people to answer.
While this question is up, I can probably give a little bit of what I do here. What I do in the county is I keep an extra spreadsheet. I keep an outside spreadsheet, and that's where I track all of my expenses against my ARP budget, right? So even though I have a financial system, I also keep the spreadsheet because when I go to do my ARP reporting, it's so much easier for me just to pull all of the stuff out of there and upload it. And I separate each tab by what it needs to be. So my contract's over $50,000, so on and so forth. So it just, for me, that organization makes it a lot easier for me than having to go through the financial system and pick out what is over 50, what's under 50. I just keep it all at one as I'm going through. And then my quarterly reports usually take me like almost only about a day to get through with interruptions. So the project expenditure reports for ARP, there's multiple reports ARP requires that if you did CARES, they did not require. So you have your quarterly reports, which are due the last day of the month following the close of your quarter. So for January 1st to March 31st, your report is coming due April 30th. Annual reporting is due for if you're a tribal government or a metropolitan city or counties with a population below 250,000 residents. They have to do what is called annual reporting. And those reports are due the last day of the following month preceding of the close of the quarter. So that would be April 30th too. And then the ARP report requires us once a year to do a recovery plan, a plan performance report. And that's when you have to go in and you have to submit what your plan is to spend your money, and how your plan from your prior quarter changes from your new quarter. So that's when you're adding any of your new projects on. Those reports are due July 31st of every single year, and they stop March 31st of 2027. So you have, even though the grant closes fully 2026, your final performance report of how you spent all those monies will be March 31st, 2027. The thing with your recovery plan and performance report is it must be posted on a public-facing website showing what you plan on using the funds for. There has to be a link that also links them back to the reporting portal for the Treasury, so that people could link back to your financial report so they could see that your performance report is also facing up with what you're reporting in your Treasury portal. Next slide. So the reporting requirements, and this is the very Cliff Note version of the reporting requirements. When you go on, you're going to see all of this broken down for you by tab and category when in the report. So like I said, when you're doing these projects, every project needs a project justification. So right on the screen, you have to write the justification for the project that you're doing. So let's just say you're doing a broadband project. Even if you're doing it for, you have 5 vendors, that project description is for the project, not the vendor. So you would have to say what the broadband project is. You're going to have to provide your obligation and expenditures, your project statuses. So once you go into your project status, this is when your demographic data starts to hit, right? So if you put not yet started, that's fine. You're not going to be required to put much in there. The minute you start to open up completed less than 50%, completed more than 50%, or completed, there are certain categories that are going to trigger you to provide demographic information. So for your public health, for your food insecurity, your housing, any of those things, you have to provide demographics. So when we did our food security task force the last time, it asked me, the question was, how many households did you assist with this funding? They're very general questions, but they are asking them. So it all depends on what you're putting in those categories. So even if you did not start your project yet, I would suggest that you put it in on your project listing so that they know that you're planning to do a project. I don't know what the Treasury, the Treasury's idea, the federal government's idea is going to be about ARP, but they are doing recapturing of funding under ERAP if the funding is not spent at milestones. I don't know if that's going to be the case here, but that's why I would say just put as much information as you can in so that they have it to know that you are working on spending your money. Adopted budgets required for anyone whose population exceeds 250,000. I think that's what we just talked about. They're looking to see how you're allocating your funding towards your ARP funding. So you want to make sure that you have like a breakdown of what you're using the funding for. And they'll give you categories within your reporting portal. And then you just have to fill in within there what your budget is going to be. You don't have to stay to that budget. Like it's not set in stone, it doesn't lock it. So let's just say you put in, I'm going to use $250,000 for my food security task force. The project went so well, now you want to increase the funding to $2 million. In your next reporting, you could change the project budget for that. They just want to kind of see how you're allocating your budget to each of the categories. I think it's their way of trying to see and make sure that you're just not using it for certain things. Like, you know, we're not just using it for offsets to our salary and wages, or that we're actually using it to help the underserved and underprivileged communities, because that's what our particularly focuses on, right? It's the underserved and underprivileged communities. Project demographics, like I said, this is coming up this time. So you need to know your targeted and impacted communities, how it helped them, how many communities you helped. There's other questions that will generate based on the category that you select. So that's important. It's going to be important to work with your departments and divisions that are rolling out these programs this time, because they're going to be the individuals that need to collect that demographic data. So you have a month before the next report is due. I would have a conversation of anybody who has started a program already to see if they can start collecting some demographic data for you, because it will be asked. Ed, to be honest with you, I don't think, and I didn't do it, but I don't think you just put 0 in there. If you spent money, I don't think you could put a 0 in there. I think it requires you to have data. I don't know if anybody else has experienced it, but I had data to put in there. But I know in the past, it wouldn't allow you to put a 0 in if you had a project that was started. And then your last thing is your subaward, your contacts, your contracts, your grants, your loans, your transfers, and your direct payments. Anybody that you're going to give a grant, a loan, anything of over $50,000 to, they're required to provide you additional information, as they have to be categorized differently in the system. They will be set up as like subawards, basically. And they have to provide you with their EIN number, a point of contact, an email for that point of contact, an address, stuff of that nature, because I think that they're going to be looking at those $50,000 or more people as the guidance when they do the OIG audit, to reach out when they do, I guess, their sample of the people that they're going to go and try to also audit. So I would make sure that you have all that information and that it's up to date as much as possible. And I would require that your sub-grantees, if anything is changed with those individuals, that they provide you with the change. So if their point of contact changes, that they provide you with who the new point of contact is. Okay, I'm all done.
Before we move on, I'm just going to do another poll that just Melissa just went over. So this question is, does the population of your municipality exceed 250,000? And I'll give everyone a couple seconds to answer.
So we have some questions why that's going on. Says, can you as the CFO set up an account under your administrator for a second municipality and then just use that ID for reporting?
As long as you can verify the information. So it's verifying your identity. So if you have multiple people within your organization that you could use their email address and their identity for, you could set it up under them and use them that way, but it will not let you set it up for the same person under multiple email addresses. It's the identity check that kicks it out. But Angel said that they might be changing that, so that might not be a problem. It's just a matter of when they're going to change it. And my worry is that it's not going to be done before the 4/30 scheduling, the reporting deadline, and getting in touch with Treasury is almost impossible. So
Bill Homeless says, after ARP, is it time to smell the roses? Bill. And we have one more person who's asking if the presentation can be made available. Yes, it will. If I get one more question, they don't get CEUs for this session because it means they weren't paying attention. When we're done with questions right now.
Just to kind of go with what Melissa was saying, has anyone else been getting the emails from slfrp@treasury.gov? Because they've actually been really helpful with all the reporting. They're constantly sending emails reminding me like, hey, action is required. Please verify your account. So I'm not sure if anyone else is getting those as well. but they're pretty important to read because they also have the links to the different portals and directions and YouTube videos on how to set it up. So I like to take advantage of a lot of those email lists with the Treasury just to stay on top of things and any updates that they have to the reporting portals. So those are good as well. And they give instructions, kind of like Melissa was talking about the ID.me and login.gov. So they're very helpful.
Yeah, those are great for general information. So they're giving general information out to everybody that everybody really should be following. And you should read them and you should keep them somewhere because you're going to go back to those emails because you're going to have a question on one of the things that they're asking you. I'm going to be 100% clear on that. But if you have a direct question about something directly related to your reporting that you're not sure about, I would start emailing them now because it's going to take them a while to get back to you. And to be honest with you, the only thing that happened with me is that we missed something and we got a contact person that emailed me back, which made me very happy because now I bother her for everything that I need. I'm sure she's not happy about it. But if you get somebody that you can contact directly, I would use them as much as possible because it's very hard. And she said to me very exclusively on the phone that they are very, very overwhelmed in Treasury. So.
Okay, so I guess I'll go into the kind of the last part of this and what is the impact of public comment on the final rule? And I think this roundtable has been a perfect example of what public comment can do to the final rule and just the discussion and the suggestions from people who are on the ground implementing versus, you know, the Treasury is so far removed from the ground in implementing the program, as well as they have to address 50 different states, tribal governments, cities, states. So they have a lot of needs that they have to put into the final rule to make sure that everyone who's covered under this program is addressed. So in order to create the final rule, the agency is not allowed to base changes by the number of comments they received. So they can't just change something because a lot of people sent in a comment. So they must base their reasoning and conclusions on the following, just the public comments themselves, scientific data, expert opinions, and facts gathered during the rulemaking process. So an example, like a very simple one, was the interim final rule did not include vaccination programs to include booster clinics and youth clinics. So in the final rule, since the FDA had approved booster shots and youth vaccinations, that now those are allowed under the COVID health part of the final rule. Next slide. Okay, so other examples of the impact of public comment was the revenue loss calculation. And there was a lot of public comment about just how smaller governments will have a harder time doing the calculation. They either don't have enough staff or the staff that they have just don't have the experience to do that calculation. The Treasury noted that they had a large response from small and tribal governments without resources to do the calculation. And they responded by adding the standard allowance to reduce the burden, which from this presentation, we can see that it's very helpful to a lot of people to just kind of move forward with implementing the program rather than worrying about doing the calculation. Did I do this correctly? Because there's a lot more room for error. Another example was the change in the percentage. What happened was when the interim rule was written, the Bureau of Labor, the Census Bureau had only data from 2016 to 2015 to 2018. By the time the final rule came out, the Census Bureau had information from 2016 to 2019 about the percentage growth in state and local government revenues. So they were able to update that percentage based on new data that was released. And the other was utility revenue, because there was a lot of public comment. Well, a lot of local governments operate their own utilities, and those utilities are either a big source of revenue to support their general fund, or salaries are split between utilities. There were many different reasonings behind it. So now utility revenue was included in the lost revenue. And Treasury also kind of brought it full circle, stating that utility revenue should be allowed because under another section of the ARP, that utility missed payments or on the consumer side are able to be covered by ARP funds for economic impacts. Yet we're saying that we can't include utility revenue as a loss on the local government that's implementing it. So it kind of came full circle that both sections of ARP now are connected. So they wanted to make sure that, I guess, all of the program goals within ARP are being met and that it's not contradictory within the rule itself. So it was also a nice addition. Okay, so this also I kind of went over about the Treasury has to address 50 states, different size governments, different, large states, small states, tribal governments. So they're not aware of all the unique niches that each type of government and level of government have. So having professionals put comments on regulation.gov and comment on the rule, maybe make Treasury aware of things that they were not aware of and that they could potentially address or either broaden or narrow the rules. I think any feedback to them would be great. And even if they don't address it in the final rule, at least you've made them aware of some of the issues that could potentially happen in the future. The administrative and implementation concerns of the program. I know when this first came out, ID.me was the only option to verify for the reporting. And I actually made a comment and emailed Treasury and kind of what Melissa was saying about, verifying my identity and tying my social security number to these funds. And I made them aware, saying, hey, I don't really think that's a good idea to link my personal social security number to my municipality's funds, which are not my funds. And I really don't believe my identity should be tied to them. And then it seems that later on they created the login.gov and did not require ID.me to be used. So it's important to kind of voice things that you could potentially see issues with later down the line. So based on just reading the rule and the public comment section, they really did have a big impact going from interim to final. And I think that just also reading a lot of what other states put forward, because there were some interesting ones about states in the South, a lot of like dams and bridges, things that I don't normally encounter. It's just nice to kind of read about different states and local governments and how they operate, just for your own personal knowledge. So anyone can participate in the public comment process. You don't have to be a professional or really in the field. Just members of the general public can comment as well. It's also interesting to read those. I think there's a little bit of misunderstanding sometimes between the general public and the people who work in government. So it's interesting to see what the general public thinks of it as well, and how that also played into the final rule. So regulations.gov is the place to submit your comments digitally, but they also accept them in writing. It's super easy to send in your comment, just they are public. So you have to be very aware of what you're posting on regulations.gov, because the entire comment will be made public. So just something to keep in mind. And I think that's all for me on my end.
We do have a polling question pertaining to what Julie just went over. I'm going to get this one out of the way before we get into discussion. So this question is, have you or any employee at your municipality participated in the public comment process?
Question we have here is, how do we change to a standard revenue loss?
When you file your report in April, you'll have to check off if you want to use the revenue loss formula or the standard allowance. And if you had already filed in January, you can change it to the standard allowance on that report. But once you check that off, you can't go back and change it after April.
Says here, before you end the seminar, would someone be able to briefly touch on how to change to this? Let me just answer that question. All right, so we're gonna get rid of that one. Is ID.me required, or can we use login.gov? Julie stated we can use login.gov, but I thought Melissa said it has to be ID.me for ARPA.
Well, for me, maybe it depends upon how big of an allocation that you receive, because Bergen County could not do it under login.gov. So we had to do the ID.me plus treasury to get in. But Julie, I don't know how, do you have a large allocation?
No, we're only at 1.5 million. So we were administered through the state, and in the title of the email that I got regarding login.gov, it says any U portal. So it may be because we're not receiving money directly from the treasury, that we're kind of a sub-recipient of the state.
Great, yeah.
Things that for us are not as complex. It's a little bit, I mean, we have such a small allocation. If we checked off standard allowance, that would really take care of the whole allocation if we wanted to. So it could be a difference of the size entity and just who's receiving directly from treasury and who is receiving funds through the state on behalf of the treasury. So something definitely to check.
There are a bunch on which one to use. So I'm marking all those answered. If we didn't answer your question, just post it again. I'll put it back up.
We could do further research too and have somebody reach back out to on this email, on the webinar, if there's any further guidance, if what has changed, if it is only any use that can use login.gov, or the ID.me plus treasury has to be used for people who got the allocation directly.
So the next one's a funny question. Beyond the ARP and CARES funding, is anyone aware of any other grant or funds available due to COVID-related municipal revenue losses? He's stating that his governing body is telling him it's available, but they can't identify where.
I haven't heard of anything. I know that there's other grant, like state grants are including COVID, that they did. I don't know if they're doing it anymore, but state grants did include COVID monies in their state grants, like they let you reallocate in 2022, but I haven't heard of anything regarding revenue loss. I think the reason why the Treasury made a big push for this revenue loss is because under CARES, everybody complained at the fact that there was nothing for revenue supplementing. So revenue loss supplementing.
I think that was the biggest controversial issue when this first came out, was the revenue loss issue, because there were so many things out there for public health expenditures and food programs and rental assistance. I think that was part of what made this very talked about at the time, was the revenue loss, and I haven't heard of anything else that has come out.
I have not either. And the one thing I can, like one of my final notes I can say, and Julie touched on this before, the ARP gives you all of the things that you cannot do. It's very clear of the things you cannot do with the funding, right? It's basically telling you to be creative with what you do to be able to use the funding. So as long as you can do it and it's legally eligible and it doesn't fall into those disallowance categories, you're probably able to do it. Just make sure you document and justify, and make sure you're using the same reasoning behind all of the projects that you're doing. That would probably be the best advice I can give you, because the outlier here is none of us who receive these funds. I'm sure none of the auditors that are on this call, nobody understands what the OIG audit is going to be. We have no guidance on that. We don't know what they're coming in to do to us when this money is going to be audited, right? And we have to remember, we've switched. If you did receive CARES money, that was under a different administration, and ARP money's under, so we don't know. And the reporting for CARES was so much different than the reporting for ARP. So there's so many outliers there of who's going to be the responsible party for paying back the funds, especially if you have ERAP money. I think that's why there's a lot of apprehension about paying the tenants, because if there is fraud in the program, are we going to be able, are we going to have to pay back the recipient, the grant recipient, or are they going to go after the people who committed the fraud? So if you're going to use it, just make sure you document. I'm sure your auditors and the auditors on this call would say it's probably the best for your regular audits too, to make sure you have good documentation, but document. That would be my final words.
And going to the creativity part of it, when you're reading, there's a lot of keywords that the Treasury kind of stresses, like should and must, may and encourage, reasonable and proportional. So kind of when you're preparing your backup documentation, those are kind of some buzzwords to keep in mind when they say you should do something versus when you must do something. And how do you define reasonable and proportional? to kind of have that in mind when you're setting up this program. What is reasonable proportional? How are you defining it? So if they do come in, you can justify, well, this is the standard we use as reasonable and proportional. And this is how we defined encouraged and may and should. Well, obviously should, you have to follow, it's required. But those kind of buzzwords are kind of keywords to open the door to certain elements of it. So it's very, you have to do a lot of careful reading and really kind of digest what you're reading. For example, like I had behavioral health responses are all considered, presume that all programs and services are reasonably and proportional responses to the harm identified, unless a response is grossly disproportional to the type or extent of the harm experienced. So like a statement like that, you have to kind of really sit back and digest and really understand what they're saying and kind of work from there.
And they also put broader paint strokes on your thing, like your public health, your public safety. Like they use broader language in those categories because I guess they felt like the public health portion would be directly responding to the pandemic, right? But when it comes to like your administration of stuff, or let's use your DPW department, they may qualify in some of these categories, but your justification is going to have to be a lot more detailed on those areas because you have to show how they can be directly related, where in public health you don't. And I think that's basically what Julie was saying, how the wording in those areas are a lot broader than you would probably see in others.
And the Treasury did kind of get more in detailed about the general population versus special populations versus groups versus the whole bunch of different classifications. So another example about in the same category, behavioral health, and the difference between may and encourage, recipients may provide services for special populations, and it doesn't necessarily have to be the general public. So you can make it more narrow, but they're giving you the opportunity to be more broad and just provide services to the general public and giving kind of their stamp of approval that, okay, behavioral health services, everyone in the population was, had the potential harm. So you can provide it to everyone, but also you can do a very small segment of the population, youth, pregnant women, underserved communities. You can make it narrower, but they're saying you may, but you don't have to. So they've also gotten kind of in the details of that as well.
And all these federal programs lately have been really wanting to focus on the disproportionate and the underserved communities. So when you're going through your projects, you want to try to see how you can put something in there for those communities, right? So they'll probably be less likely to be audited or looked at or scrutinized when you are trying to help the underprivileged communities. And not everybody has underprivileged or underserved communities, I get it, but there has to be some part of your population that is struggling, even in the most affluent communities, right? Bergen County has always been seen as an affluent county, but we are seeing that there's major issues here now with food insecurity, like I said before, homelessness, emergency rental needs, which a couple of years ago or 10 years ago, you might not have seen that here. So you got to kind of look within your community and see what the needs are of your community to see how you can focus on that. Behavioral health is a big issue. We're getting a lot of things for behavioral health. A lot of people struggled with mental health and behavioral health during this pandemic. Opioid abuse, that's another big thing. Drug abuse, people are doing a lot of programs with that from what I have spoke to, and that hits any community. That's just not in your big towns and your big cities. That's drug overdoses and drug abuse is in smaller. So you can use those type of things to figure out how to use your money if you're looking for projects to kind of try to spend. But you got to try to understand your community now as a whole, rather than your community as it was prior to the pandemic. That's one of the things that we were told too. Like we were told by the Treasury that when we spoke to them in the beginning, that we have to kind of look at our community now as what their needs are now. So I don't know if that helps at all.
All right, we got some more questions. is, I think we answered this one. Talks about the police salaries. We already answered that one. Right, I think, Julie, did you say it? Or maybe Angel?
Yeah, you can, under the revenue loss category, use the funds for police salary. But you do need to keep in mind that these funds end. So if you're going to commit the funds to salary, you're going to have to figure out where that money is coming from after the funds end.
Bill Homa said, John and panel, thank you for sharing your knowledge about ARP. It was extremely helpful to me. Thanks for answering your questions. Bill, I know nothing about it. That's why I have Melissa, because she's good at it. But thank you. This one is, I'm sorry I may have missed the answers. So when I sign up for this with the account admin point of contact for reporting and authorized rep for reporting, does it have to be 3 different people, and do they have to register as well? All right, I think that did come up before. What was the answer?
They suggest that you have 3 different people. They don't require you to have 3 different people. So you could be the person that inputs the information and approves the information in the system. But our suggestion as the panel was to make sure that if you're going to be the person that's inputting it and approving it, that outside of the system, you have somebody else signing off on it.
So there's somebody asking if there's somebody out there that they can contract with to do reporting. If you want somebody to help, you can always reach out to me directly, and I'll see if I can hook you up with somebody to do that for you. Let's see. Somebody said this is the best ARP presentation they've ever seen. So that's great. Kudos to you guys on the panel. Joe Kuhn's making a statement. You can also directly charge any time spent on the ARP related projects, as long as their timesheets indicates the amount of time.
And that goes back, and to go back to that goes back to making sure you have your documentation. So if you're going to be charging your salaries and wages, you want to make sure you have timesheets that specifically break down the time that you're using for ARP. So if they're going to be doing 2 hours of overtime and they have their timesheet, there should be a justification section on your timesheet that says 2 hours overtime ARP, so that you know that that goes there. So that goes with your documentation. That should all go in with your documentation for your audit.
Next one is, it's an open-ended one. I don't know if we do that here. Anyone have any very successful new programs that were funded by ARP? I think that's tough to answer here. That's more of a survey question that maybe.
I mean, we could talk about maybe our programs. We have a very successful food security task force program that's been working wonderfully and helping a lot of people. I mean, I spoke about that before on here. That's one of the new initiatives and programs we started with the CARES funding that did carry over to the ARP funding. So that's one. And that helps the underserved, underprivileged communities, helps the senior citizens. So it's a very good program. I mean, if somebody's really interested in it, we have a very good task force here in Bergen County that I'm sure would love to hear from you if you're interested in doing something of that nature.
And we have a lot of people saying thank you. So they enjoyed it very much. Thank you to all the panelists. It was obviously, you put a lot of time into putting it together.
I'm going to do one last poll just to round this out for everyone. And the question is, did you learn something new today? Again, we're getting a lot of good response. You guys totally covered a great amount of information. Leave this up for a minute. If there's any other questions, feel free to ask them now.
You're getting pummeled with a lot of thank yous in the chat.
All right, looks like almost everyone did learn something new today, so you guys can at least know you did your job. Thanks, guys.
There's always one no. All right, I see nothing else in the chat or the questions. So I think with that, I'd like to thank all the panelists who are putting that together. I know you guys put a lot of hard work into that. So thank you very much.
Thank you, everyone.
Thank you.
Oh,
Thank
and
you.
Dana says, thank you all. Cannot wait for Angelica to take over here. That's great. All right, guys, thank you very much.
Thank you,
Thanks,
bye.
everyone.
Thanks,
Have a nice
bye.
afternoon. Thanks.
Bye.